Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, February 8th, 2008. Well, another week has come and gone in this turbulent 2008, and what can you say but amazing market. This is by far one of the crazier markets I've seen in a long time, and it is a very scary market from the aspect of staying safe, staying on the sidelines, picking your positions very carefully as to not get chopped off by this crazy market, whether it's a down move or an up move. And for most part it's been down moves, but there has been dramatic rallies as well, whether it's a Fed cut here, a talk by this person here, earnings by this company here or there. But in any case, the market has been a turbulent one in 2008 so far, and it looks to be like that will continue in the near future. Now, what are these videos good for? Well, keeping you safe for one thing, going over technicals is another, pointing out points in the market is another, and there are many aspects that I like to perform or put forth in these videos. But number one is just to enlighten everyone. I hate the hype in the media. The media hype stocks, analysts hype stocks. If you follow the technicals, InTheMoneyStocks.com and myself included believe you can see through all the BS out there and come to the right conclusion if you learn the technicals and read them properly. Now we're going to get into charts today again and look over odds and ends, but for the most part it's all about just focusing in on the different moves, on the different psychologies, and on the different facets that each chart tells us, whether it's volume, whether it's stochastics, and so forth. Now, you guys know I believe price pattern and time is probably the top of the list. Right under there, level 2 reading is very important if you're going to be a trader or an investor, to understand who's buying what, how many shares of this and that, and the volume included. Also, what you have to understand is that most technicals like stochastics and MACD and RSI, those are always slightly lagging whatever's going on. So keep that in mind as well. I do use them, but I always use them as a secondary indicator, kind of a confirmation. If I'm on the fence about a long position or a short position, I look to the stochastics to see what it shows me, and it kind of tips me one way or the other. It'll never make a decision for me because I don't like the lagging effect of these indicators, but I look at the charts for the initial view, and then we look to the technicals following that, the technical indicators. So let's get right into this market here. And we saw a relatively choppy market today, but not quite the same as yesterday. Yesterday had wild swings, especially late in the afternoon, that was just unbelievable. I have not seen a day like yesterday with the choppy trading and the massive move up and downs in a really long time. And what we're going to see here today is in the markets we had a mixed market. On one hand, we saw the S&P and the Dow on the downside, and on the other hand, you had the NASDAQ, which was rallying. Now, there was a few reasons for that. Number one, you got some major oversold positions here. You got Google, which established itself back above 500, which was a technical support level yesterday, and the fact that that's closed above 500 was bullish for the stock itself. On the other hand, you got Amazon.com, which announced a $1 billion buyback of stock. So there's multiple reasons here that you can look to why the NASDAQ was stronger today. Part of them technical, and backed up through that technicals is the news on Amazon and so forth. There were a couple decent earnings out yesterday as well, Activision being one, AVTI. But long story short, folks, we saw a mixed market today. You can see the S&P futures, how they dipped, they moved back up, they dipped again, they zigzagged back and forth here, ultimately closing down 10 points today. Now, the keys in this chart, there's not a lot to point out here. It was generally a whipsaw day, and one thing I do want to point out is that some moves fail, and that's key, is when you're dealing with and this is going to be one of the main lessons I want to put forth today, is that when you're dealing with a bear market, breakouts often fail. And you might say, well, how does that work? Because it's a breakout. Should a breakout by nature means that something's moving up, or breaking out of its channel? And that's true, but you have to understand is that in a bear market, there's just not a lot of follow-through. So a breakout can be a failed breakout in reverse trend. And when you get a breakout that fails, the reverse move is always more dramatic. And this is something that I really want to impress upon you all here today, is that I'm going to show you this right here. And this is such a great chart pattern right in here, because I want to really point this out. You can see what was happening here. We moved up above the moving averages. So we broke through the 20 right here, the 50 moving average, the 200 right here, and above the 50 moving average. So you think right here we clear all those moving averages, and then we go into what's called a sideways channel pattern, or a consolidation pattern, where you have these up moves and attempts to break out. Attempt, because you see it was up that high and pulled back, but it never breaks below this channel right here, which is the 50 moving average. So at this point, you're trying to consolidate before another breakout. And then what happens here is that you get a push-up, and you had to basically, what you're looking for is a close on a candle above this line, ultimately even above the top here, for a secondary confirmation on a breakout, and you look for that to happen. Well, that did happen. And this is what happens again in a bear market. Bull moves fail often. So please understand that as traders out there. So you get that move up. You close up here, which is well above the breakout line. You even touch a little higher here on the next candle, and then what happens? You get a reversal. And look at the massive move. And as I just said before, failed breakouts, meaning a breakout that just reverses, the downside moves are always more powerful than expected, or just a more powerful move down. And you can see that move. Once that failed there, everyone runs for the fences, or runs for the hills, I should say, and the move down is very dramatic. So keep this in mind, chalk it up in the little book there, and remember that. And that works on both sides, okay? So when you have a breakdown take effect, and it doesn't technically break, it breaks down, and then the breakdown fails, and somehow it comes down, and you get a little push up, and it comes back inside that upside channel. The upside move can be very dramatic. All right, so that's the little lesson on a technical side of things today, what we want to point out. And here you see the move back up. After we bottomed out, you can see a nice little reversal candle. You see a nice little tail down there. And then we finally move up. We pull back a little bit right at that 20 moving average, which is right here. And then we continue to rally back up. We get above that 50 and 200 moving average again, and then just reverse into the close. So a very whipsaw day today, but ultimately this is really what I wanted to point out on this intraday chart. Now let's start talking about the daily charts. Because what we're seeing here, and I mentioned yesterday that I'm beginning to slightly favor, and we at InTheMoneyStocks.com are beginning to slightly favor the upside, just ever so slightly. We're not sold on it yet, because there is still a possibility we dip to a double bottom area right down here. But as of now, we're seeing a little bit of a base building right in here, and you guys can probably see this by me drawing. We touched it, and we bounced back up yesterday. We came down again today, and we still didn't close below this line. So this is the key line I'm looking at on the futures. And again, this is the daily futures chart on the E-minis March 08 contract. And this is what I'm going to be following. So right now, this is the line we're watching. Should we close below here? Should we close down here on a day, or up around here, or wherever? Then all of a sudden you start looking at the low end of things again, and a possible move to the exact double bottom. Should we get down there, and we'll see from then on if we're going to break. But in the near term, I almost like this pattern, and we like this pattern as a possible mover up here again. We had a nice solid move up here in the rally. Now we've pulled back, and granted, we are below the 20, but the 20 was punctured relatively quickly here. So again, if it bounces back up, that's not as much resistance anymore because it was already punctured to the upside once. The next major resistance point would be in this area up here, or at the top. You'd have two areas of resistance, this being resistance 1, this being resistance 2. Alright, so those two levels on the upside we need to watch. So as of now, we've laid out two things we need to focus on. You have this breakdown line right here. Should we not break down, we close above this 20 again, then the next area you're looking for on the upside is this top here, which was the high on this candle. And then the next area, should we get through that, is the 50 moving average. Alright, now let's focus in on the Qs. That's the ES, and that pretty much monitors the S&P 500, and you can kind of follow that to a T with those. What we want to focus in on is the NASDAQ, and the NASDAQ's a little sloppier of a chart. It's not quite as clear. You have the general same pattern here, but it was not as strong. We didn't get above the 20, and we never confirmed the move above the 20 before failing and coming down. But the last 2 days, we've seen a little bit of a move back up as the NASDAQ's been the stronger index after a few of these nice earnings announcements and the Amazon buyback. Alright, so again, we can focus in here, see if we're building a little bit of a base. We want to focus now and see if we're going to hold this level, the low. And if we can hold that, that's great. If not, then we're definitely probably going to retest this low down here. On the upside, should we get above the 20, and we can take away that line, that's not important there. Should we get back above this line here and confirm that move up, well then you have a move easily to this line here, with it should be no problem at all, and then possibly up to this 50. The 50 I am seeing is going to have the resistance, and keep in mind folks, see this resistance line here? The 50 moving average continues to move lower, so my guess is if we do attempt to get up to this level, the 50 moving average will have moved right in line with this, and everything has symmetry, as I always say. So that's my guess, and that's just again, these are all guesses and just opinions by me and should not be taken seriously. Always consult your financial advisor, as I always say, as these are just my pure opinions, and that's about it. But long story short, there's a few things to watch on these charts, and we can quickly look at the Qs. The Qs that have the same general chart, you have a nice little possible double bottom here and a possible move up coming, and we'll continue to monitor that. Other than that, folks, that's almost all for today. I want to leave everyone with a nice note on the weekend, and we'll see what happens. But again, a slight little bias to the upside now. It wouldn't be shocking to me to see a little rally coming in. Oil was up huge today. I want to point that out before we go, folks. Look at the USO. This is a big move on the USO, closing above the 20 and the 50 today on the daily chart. Now the question is, we didn't confirm the move up. We have to confirm it to really hold it. And if we pull back on Monday, then we may not confirm it, and we could move back down. But that's something to watch as well. Have a wonderful day, guys. We'll talk to you soon. Take care.